ETFs. This is where we come in, look at different tools to trade a market.
Right.
We can look for markets that are correlated. So we've got a list of about 42 markets on the website. But if you actually look at markets that are connected with that, it opens up to a huge list. If you think of all the companies, all the stocks that are linked into the different ETFs, huge list of markets you can get all focused from the same bit of data. Who's ever traded the Treasury bonds, T-bonds, the US Treasury bonds? Who's ever bought a share of a bank stock? Yes. A lot of the bank stocks, the big investment banks, will move based on the value of the Treasury bonds. There's a huge correlation between them. There's negative correlation between them. Negative correlation between Treasury bonds and bank stocks. Not all bank stocks, a lot of the retail banks won't be involved in this. You like your Lloyds and stuff, don't have a strong correlation. But this is the US Treasury bonds. But there are still a lot of the UK banks heavily, because it's a global market, still heavily correlated with that. Barclays and HSBC are two very, very strong correlations. I've got Barclays on here. Very rarely get asked questions about US Treasuries. People don't know what they are. They don't know how to trade Treasuries. They don't look at the data, but it's there. And they are actually nice charts, and they're very, very, very liquid. But we can use them to actually invest, determine when's the best time to buy Barclays stocks or HSBC or Bank of America. They will move based on the value of Treasury bonds. Last current signals we've had, again, just to keep it simple, we know once we see an index, we can go in and look at the positions, but just to give you an indication of what type of movement we've had in the Treasury bond. This is the US Treasury bonds, the 30-year. This is where it's undervalued. We're looking for rises, overvalued, looking for falls. If I take that data and we go on now and look at the correlations with some of the banks. Yeah, so the black candles, I've just coloured them all in one colour so you actually see the black candles is the Treasury bonds, what we're seeing here. And we got signals to buy down here, signals to sell in the middle, and signals to buy again over here. So we see that. This was our buy. This is the daily chart now, so it looks a little bit different. Signals to sell, we're signals to buy down here. Now look at the correlation with Barclays. Barclays is the gold in between. Treasury bonds go up, Barclays will come down. Right at the top there, stopped, and stopped dead, turned, went up. That was the time to buy Barclays. And now we're actually starting to get some buy signals down here where the Treasury bonds start to perform well, and the bank stocks are actually coming under pressure again. It's hard work to go and sit and drill down into individual companies to know which one to buy and sell. I keep a list of which ones that are connected to certain markets, and I will focus on those based on the signals I'm getting on Treasury bonds. That makes sense? Yeah. I don't need to know anything about Barclays. I don't need to spend any time looking at it. Just make sure that the correlation is still intact. As long as the correlation is still there. Over time, it has been, the chart is back a long time, the correlation is there. As long as the correlation is still intact, I can trade Barclays based on what it's doing with Treasury bonds. Bank of America, as you'd expect. Obviously with American Treasury bonds. But yeah, Barclays and HSBC are very, very strongly correlated. And the Treasury bonds, as I said, Treasury bond ETF, code of its TLT, obviously it tracks the futures. That's what I was saying, a lot of the ETFs will track the future. So rather than getting in and trading the futures, go and buy 100 shares of TLT. But they're the ones with the strongest correlation. That's not an exhaustive list. Definitely there'll be other banks on there if you want to spend the time finding little correlations. They're the main ones that I've focused on. Okay, for the list that I've built up. Crude oil. Crude and stocks are going to have positive correlation this time. BP is worth more if the product that they're selling is worth more. And BP is the first one I have. There's the current share price of BP in gold, and crude is black. And you'll see them move together, very, very similar. So the point to buy BP shares is the point where you want to buy crude. So I'll be looking at a buy point in crude, and I'll look to buy some shares as well. So I'm trying to maximize. So you've been given an indication that the market's going to go from A to B. You need to make as much as possible from that move. If you know where it's going, you need to get into it and maximize what it's going to do. Okay, so in order to do that, you have to have multiple ways of doing it. I know the product that they're selling. I know more about their product than I know about the company. So as long as the company, I can check the chart and see the correlation, I'm happy to trade the company as well. And if you don't want to trade individual stocks, there'd be a sector ETF. There'd be an ETF that tracks crude. There'll also be an ETF, XOP, I think that's what it is. XOP is oil and gas producers. There's a list of some of the strongest correlated ones. Again, I've focused on companies either in the US or the UK. Gold, Barrick Gold, stocks obviously tracking the price of gold. So the point where I want to buy gold, I'm happy to buy gold, I'll look to buy some shares. Does that make sense? Yeah? Anybody thought of trying to do that? Anybody linked markets like that together before? Anybody thinking why they haven't done it before? If you have the time and you want to be a stock picker, or you want to do research and you want to go into a new gold miner or a new copper miner or stuff like that, they're not going to follow this because they're going to have their own factors. They might find gold in the next 6 or 12 months. They're being bought in for that. So that's where your real stock picking comes into it. But you need time and you sit down. It's actually very rewarding to do that if you can. But if you're already doing the analysis on gold, so you're doing that anyway. So you don't need to be a stock picker at that time. You're doing the analysis on gold. I'd like to be a buyer of gold. Maybe there's another way I can maximize the return of this. Rather than just buying gold, I can buy some ETF. I can buy some gold stocks. And you don't have to spend hours and hours and hours looking at actually doing the research on all those companies. They don't need to. Say, well, definitely, if you want to be a stock picker on smaller companies, you have to spend the time to do the due diligence. So there's your gold list. Coffee's an interest. We've already looked at Starbucks and coffee. That was the point last year when we got a really nice signal on coffee. At the same point, obviously, you could have bought Starbucks. Makes sense. There's not many others you can do it with. Actually, Costa in the UK is actually owned by Whitbread. Yeah. So you can't. The reason why a lot of the companies will be US based is because they're large enough to be their own entities. Trading a little bit easier than you think. There's a few things I've hopefully shown you there with regard, one, the turtle trading strategy, how you possibly get in. It looks really, really simple. And also, you're already doing the work, maybe add in 2 or 3 markets that are associated with it and trade multiples of the same thing. And you've done no extra work, not done any extra work at all, and it's right there. So I think a lot of the times we do make it a little bit more complicated than what it should be. I know the product's based on CoT, understanding of the value of a particular commodity, whether it's gold or silver or whatever it is. I have an understanding of that based on the CoT data. So I can then take a position or a view on a company based on the perception of the commodity. This is the list of what I will send through. Is your natural gas, your things into it, is your silver miners, your copper, you're saying a few of the UK companies on there as well. Really strong correlations with copper. So and we had a fantastic move. We've seen the CoT data, the commercials buying into copper at the bottom. All of those stock prices rallied afterwards. You could have profited in multiple ways, all from just seeing the positions were changing at the bottom of copper.